Yo, what's up guys? This is Sean Tan and today we will talk about financing. Why I love real estate so much is because I get to have this keyword leverage. I leverage on other people's money and other people's time. So we are now talking about the money side of things where you need money to start investing, but it's quite impossible that you are paying 100% for a particular property itself. So just for information, your first and second property that you purchase residential, you are entitled up to 90% of margin. Meaning, if the house is $500,000, you get to loan up to $450,000 from the bank to help you grow your wealth. How cool is that? But for first timers, they are very afraid. Just like during my first time, I have no clue what bank, what's rates, and today we will just run through one by one when you compare your loan rates. Number one, interest rates. It was called BLR last time, base lending rate, but they have just revised last year into base rate because it wouldn't make sense when base and they minus. So in total, is what you need to know is you need to have what's the effective rate for the year. Is always 4.3 to 4.5, or of course whichever lower is better. Number two would be terms of the financing, which is how long you are planning to finish paying this loan. Is it for 30 years or 35 years? Or there's always debate for this part of the loan. School of thought number one, which is business people, they can already finish paying the entire property without financing. So they are trying to save the interest. Another school of thought would be, like myself, I would drag as long as possible so I can have the lowest possible installment amount every month. So it allows me to have rentals to cover my installment amount every month. I don't need to have loans so long. Sean, I don't have to take so long. Point of view is, if you understand how interest rates are calculated in housing loans, they are calculated daily. So let's say if you take a $500,000 loan from the bank and this year you make a lot of money, you just plow back into the amount. Let's say I make $100,000 a year. I put back all into the housing loan, so I'm owning them $400,000, and that will be the amount they calculate the interest on. Those are the basic things that your bankers will actually tell you, but do ask all this as well. Number three, what's the lock-in period? Lock-in period is when you change banks. Imagine if I buy to this year, 7 years later, the bank interest rate actually reduces, or there's a better rate in other banks. It's a business, so we will change bank financings. But if you cancel off this loan, there will be a charge, and how much would that be? Another thing would be, because of the diverse business opportunities right now, business needs are different. Therefore, banks also come up with products like, is it a full loan, or is it a flexi loan, or a half flexi? These are just facilities that, just in case business needs, you need to take money out from the housing loan account. Example, I'm doing a business and I took a $500,000 loan, and this year business is good, I plow in more money, so I pay less interest daily. But then the next year my business kind of screwed up and I need cash flow, so I can actually go back into this housing loan and take out money out again. But there will be admin charges every time you withdraw. There's definitely a website that you guys should all check out. It's called Ringgit Plus, where there's a compilation of all different types of financing facilities, inclusive of credit cards and things like that. Go check it out. I will drop the link below. Another problem is this: how are we evaluated by the banks? The answer is, we are all evaluated by computers and AIs based on your records in CRIS and CTOS. In these systems, you can actually be checked all your records by the bank, meaning your credit cards, your electrical bills, your home, whatever bills that is by default you didn't pay, or you owe them by how many months you didn't clear off your loans. They know, inclusive of PTPTN. There's a trick to it. Let's say you're buying the house in 3 months time, you foresee already you are paying down payment now, but loan is in application. What you can do is, prior to that, if you have money, try to clear off everything which is your secrets and your CTOS, and it's actually available to be checked online. All their records will be refreshed and re-evaluated on a monthly basis. With this kind of financing ability, such as the number 1 house 90%, number 2 house 90%, what about the third one? Third one is at max 80 to 75%. That's why now to invest properties, you need to be in a group. I will cover that in my next following video, and I think that's all for today. As for first-time home buyers, the banks also acknowledge that you have the ability to buy, and they are encouraging people to get loans. They are pushing for margins up to 110%. Once again, your first house and second house, you'll get 90%, but banks are giving 110% because many actually complain that they do not have extra money to pay for the lawyer, for the valuer, and things like that. So 110% means if you're buying a $500,000 house, 500,000, you are getting 550,000 back. Also, all this information you can get in the website of Ringgit Plus, and I really encourage you guys to do so. That's all for this week. I really hope that this video will help. If you like this video, like it, share it, or even subscribe for more information. Until next time, I will see you guys soon. Ciao.